Hey, Dan Passarelli here. Happy Friday. Woohoo! We made it to another weekend. What are you going to do this weekend? Well, maybe we can do some stock research. That's what nerds like me like to do on the weekend. That and thinking about the market, writing about the market, living and breathing the market. You know the routine. But hopefully you have some fun too. Now, let's do a little bit of recap of the week. So let's see. This is Friday, Thursday, Wednesday, Tuesday, Monday, last Friday. Oh, goodness, we are down on the week, down from last Friday's close. And notably, yesterday formed an inflection point that gives us some pretty solid resistance here. We're not too far away from it, so it's not like it can't be broken or anything like that. But it did establish a resistance level, and that is important from a technical standpoint. Now, as far as the fundamentals go, let's talk about next week, what we've got coming down the pipeline. Well, next week we have CPI and PPI for the month. Yes, that's right, inflation. Now, inflation is one of those things where it's intuitive, and a lot of economists are talking about the concept that tariffs could lead to an inflationary situation. So everybody's eyes are kind of on that, with probably a little bit of an itchy trigger finger. I don't know if I'd say an itchy trigger finger. I think people would need some real confirmation that inflation was changing. I think one little bit of a small change one month after another probably doesn't do too much to change hearts and minds and, well, what they do with their pocketbooks is what we really care about, because that's what drives markets. But it doesn't change the fact that CPI and PPI are very, very important stuff. Now, speaking of tariffs, inflation, that kind of thing, we just had the Chicago Fed head, Goolsbee, speaking today, and he said that exact same thing. We're going to have to keep an eye on inflation as a result of tariffs before cutting rates. Now, what that did is that caused the expectations for the target interest rate at the next Fed meeting, which is right around the corner, a little over 2 weeks, 2.5 weeks away, July 30th. There's now a 93.3% chance that interest rates stay the same. Now, that is based off the CME Group's Fed funds contract. And that's people, real traders, institutional traders, putting their money where their mouth is on hedges and bets and expectations. Historically, over the last few years, that has been under-forgiving. Forgiving or under-forgiving, I don't really know which way. But it has predicted a greater chance of a Fed cut than expected. So if they're predicting only a 6.7% chance of a Fed cut, it's probably zero. Okay, that being said, what else do we have on tap for next week? Well, we got the big thing. We've got earnings season starting to ramp up next week. It's not the big week for earnings season. That is the following one, and the one after that, and one after that. But earnings season does indeed start in real life as of tomorrow. So better be prepared. If you have not attended the live training on trading earnings, we're doing one final encore tomorrow. You should see an invitation in your inbox for that, or go to markettaker.com/reg. Or just message us at admin or support at markettaker.com. We'll make sure you get registered. But better to register yourself, right? Take matters into your own hands. That's what we're all about here at Market Taker, right? Empowering you. All right. That being said, friends, have a great rest of your weekend. I will be back on Monday. Trade smart and be ready for some more trading next week. Trade smart.